Hello, this is the Chartprofit webcast, approaching 3 hours into the trading day on Friday 26th of July. Start with the pre-open comment from this morning. Pre-open comment on Wednesday, we said that the minor point of control was at 21.16. It's up here. Said there could be a useful level to monitor intraday. He actually had a probe above that very early on and then a sell-off, and as you know, we marked aggressive selling. We said pre-open Thursday, these red at bottom lows are tested 80% of the time within a day or two. We also said, noted there was support at 20.95, and our first level support resistance going into that day, 21.07, which is the 10-month point of control. It was all pre-open Thursday, and again we opened Thursday, it was a little rally up to that level, 21.07, and immediately sold off, marked aggressive selling again down here. And we did sell off down to the support at 20.95 here. As you know, in times of anxiety, markets tend to trace back to the point of control of most importance. In this case, it's 21.07, rejected it here, and we've ended up printing around this 20.95 area again. And if we just look at current live chart for the E-mini, you can see we're currently printing at that level right now. If you check the ebook regularly, you'll note the levels of these controlling prices, and on the spider, as you know, it's been 209.92, and again that's where this chart has more or less ended up at the end of this week. Relatively the best of the US stock indices. ETFs is IWM, Russell 2000, you can just see that's obvious on the chart here. Big support down here at 124.50. Large cap diamonds just printing at the end of this week underneath its point of control at 180. This is the breadth charts through the daily breadth charts through Thursday's close. New York, two most important indicators at the bottom here. One, the net new highs 25 indicator with the 5-day moving average in yellow just above zero, and the percentage of stocks greater than their 50-day moving average currently below 50. So this is kind of mixed, but this indicator at the bottom here has been below 50 throughout June. Nasdaq from this perspective relatively better here, and certainly the Russell 2000 breadth as well. So for New York, the pulse chart looks like this. Breadth not completely convincing. The price trend at the bottom here, red below zero on the momentum indicator, indicating the trend is negative, actually very flat, close to zero. So same thing really from last week. So we'll see an improvement here, some green coming in which we haven't seen yet, some green here which we haven't seen yet, and certainly want to see this support holding here on the spider. The anxiety we spoke about earlier, most of it I think centered around the Greece situation and the European charts, so we'll just quickly review these charts which are now closed, these indices. This is the Euro Stock 600 chart. I've drawn in here the dotted line is the halfway point off the April high, and that's very close to the minor point of control, 396. So this is kind of the area of support resistance, and we've actually just managed to close just above or at that level, again back at the controlling price ahead of this weekend. You can see we had a decent rally at the start, well actually at the end of last week, the start of this week, and we've held the slightly higher prices here, so these European charts don't look too weak at the moment. Let's hope they look like this on Monday morning. This is the Euronext 100 chart, again closing very close to its point of control at 984.50. But it's printing here back above that halfway point of the April high. Very similar chart is the French CAC 40 index. Again, there's the halfway point, there's the consolidation above it, here's the point of control, and there's the close. The close this week very close to that level. IBEX 35 looks very similar. Finally, the German DAX. It's found its resistance at that halfway point, but it is closing again very close to its controlling price. These are markets obviously waiting for something. Whether we get it this weekend or not, we'll wait and see. Maybe surprisingly, the FTSE 100, the UK FTSE 100, has had a relatively weak close at the end of this week and has found obvious resistance at that halfway point. The big support is now here, 65.60. We'll look at the sentiment indicators. My version of the RIDEX assets ratio, almost unchanged at just above 10. As we know, last week the ratio fell to 8.78, which was a 7-month low. Chart looks like this. So last week we reached the lowest point here in the ratio since October back here. Ratio's up a little from there, but see on the chart the ratio's fallen from above 14 earlier in the year down to a ratio here below 9. And also, actually this is from last week's webcast, looking here at the public poll from AAII, just the bulls percentage, and we noted that the 4-week moving average actually reached its lowest level last week since 2009, which was an extreme reading. And this week the bulls percentage is actually sharply higher at 35.6, and bears percentage sharply lower at 21.7. And so the net, that's this histogram over here, the single red line, is quite sharply higher, obviously, at 13.9, and the 4-week moving average of net in yellow here is up slightly from this level last week, this negative reading, which was the lowest since this point back in 2013. As we noted in last week's webcast, there were a lot of bears emerging last week, slightly less so this week. Investors Intelligence poll, bulls percentage here as well was higher at 51.6, up from the previous week's 45.5. That was the lowest since October. So it's the same story really. Bears percent here as well was lower, 15.4, down from the previous week's 16.5. That was the highest since January. If we look at the exposure index, that's the current equity exposure of active money managers. That's almost unchanged this week at 58.96 here. Last week's slightly lower reading was the lowest since October, back over here. So less bears this week than there were last week, but last week a lot of these indicators were almost, we could say, showing a high level of bearish sentiment. And just a reminder, these are contrarian indicators. If we can get resolution one way or another in the Greek situation, which is troubling the market at the moment, you'd have to say without that kind of input, we'd be regarding these sentiment indicators in a fairly contrarian and therefore bullish fashion. Been saying for a while now in the supporting charts and bonds, TLT, the price is below this 117.14 level, and that's weak location. So here's the level to watch, and this is not good location below that level of consolidation. So this week has actually been spent almost entirely below that level, and we are on a new low for this move right now. Dollar index has been printing back above 94.67, the 12-month point of control, in a stronger price location. Not completely convincing, but this price action here better than this. If we saw like an obvious higher low above that level, that would be good for the dollar bulls. Not surprisingly, GLD, the gold ETF, with the dollar stronger there. Said in May a probe above the half-range resistance was rejected. I said GLD remains in a weak location. So once again, not very much positive comment about this chart. In fact, none whatsoever. Here's the low back in early November to the subsequent high. There's the halfway point resistance. So that's that rejection. The point of control at 115.12 here. Late last week probed up into that, and that was rejected. And we're currently here, so a very weak looking chart. At some point these charts, this is silver, SLV ETF, at some point these charts will look more like a buy, either high or low above here for instance, or we fall down to a possibility of a sharp fall down to projected targets that we'll look at if we take out this March low. But these certainly don't look like positive charts again to me. sounding like a broken record. Same comment every week for the Australian dollar. This major point of control at 0.76 exact here. All this is support at that level. All proven support, but if you see price down here, we could suddenly see, I believe, a sharp decline. So we need this level to hold, and personally I wouldn't be interested in the long side unless we see a higher low above this level. In here it's unsure from this kind of analysis, but here definitely weak. I wouldn't be buying any of this price action. Dollar remains strong relatively against the yen up here above its 12-month point of control, and the pound trying to maneuver its way through this minefield of resistance, probed above the major half here. We've talked about all this overhead resistance previously, but currently holding the 12-month point of control here. Price obviously back down below 156.70, and we might see this chart quickly reverse, but this is the first possibility of a higher low above a level. So if we see this, that's kind of encouraging. Seeing relative strength of the pound against other charts, but against the dollar, it's just struggling to get a footing here. And the euro still struggling with the 12-month point of control resistance. Sorry, that's better, at 113.40, the 12-month point of control. Again, not interested in the long side of this chart unless we see something like this. Showed this chart at the start of the month. It's the average June for Dow in the 5-year. We're based from 100 at the start. We get a little rally, then a decline down to about the 10th, 11th, and then a rally up to about the 23rd, and then we see some weakness. It's been disappointing so far. Looks something like it in terms of the swings. We saw a decline down here down to the 9th, and then generally a little bit of a rally up to about the 23rd, and now we're seeing a bit of weakness. Something like this, but the extent of the rally in that period there usually a bit stronger. And so to July, it looks like this. Again, 9 decades showing July in the 5th year, or year ending in 5, all rebased to 100. Just 2 of the 9 end the month, or have ended the month below where they started. So the average looks like this, a decent rally at the start of the month through to the middle, and then we go nowhere. So let's hope for this bit. That means we need some good news over the weekend. Last look at the E-mini S&P, printing now below that point of control at the end of the week. Some nerves going into the weekend here. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.